Welcome to Lesson 4. Today we'll be discussing everything you need to know about hiring and paying workers. Our 4 goals for this lesson are: decide if you've hired an employee or a contractor, understand how to file 1099s for contractors, understand how to pay employees, and know how and how much to pay yourself. Let's jump in with the first thing you'll need to do when you hire someone. The first step is to decide if this person will be classified as an employee or a contractor. You'll need to know this because there are laws about how you can treat one versus the other, and there are tax implications for whichever you choose. If you hire an employee, the worker is generally required to be at a specific place for a required number of hours. They get paid a salary or an hourly rate and are usually provided with all of the equipment needed to do the job. And here's the important tax part for you. An employee has taxes taken out of their paycheck. On the other hand, if you hire a contractor, they can typically do the work on their own time without the need to be monitored. They can also accept or deny work. Most contractors are paid a flat amount once the job has been completed. They use their own equipment and don't usually require training to do the job. And here's the important tax part for you. A contractor will likely be issued a 1099 NEC, which we'll talk about more in a minute. Some examples of contractors include second shooters for photography, website designers, and copy editors. Now remember, not every situation is black and white, and some agreements may fall into a gray area. If that's the case, step back and think about why this person has been hired. Is the job they're doing necessary in running your business? If so, they'll probably be considered an employee. If they aren't completely necessary, then they're most likely a contractor. So if you've determined that you've hired a contractor and not an employee, then you may be required to issue them a 1099 NEC. You're required to give a 1099 NEC form to any contractor that you pay $600 or more for services during the year. You don't need to give 1099s to corporations or to anyone you only paid for goods. You also won't need to give one to anyone you paid using PayPal Business or credit cards, since those processors are responsible for reporting their own information. You must distribute the 1099s and send them to the IRS by January 31st. If you have to file 1099s, don't stress out. They're pretty easy to DIY. I suggest first gathering a list of names and a W-9 from each person. Then find an online filer like 1099online.com where you'll enter the payer, payee, and total amount paid. Then you'll just review your work and electronically file. It's really as easy as that. Now, if you've determined that you've hired an employee and not contractor, you're going to want to set up payroll. I highly suggest that you hire a payroll company to do this for you. The only one I recommend to my clients is Gusto because they take care of all of the paperwork and they have exceptional customer service. You'll also need to apply for an employer ID number through the IRS website like we discussed in Lesson 1. If your state requires it, you'll apply for a state withholding tax ID number and possibly an unemployment tax account as well. Then make sure your new employee completes all of the necessary paperwork. If you have a payroll company, they should walk you through this. Just remember that when you have an employee, you have a payroll. And when you have a payroll, you have to file tax forms at both the state and federal level. Now we've come to my favorite topic, how to show yourself the money. If you're a sole proprietor or a single member LLC, you can just transfer money to yourself as often as you need. This will be recorded as an owner's draw and not categorized as wages or expenses. But remember, don't use your business funds to make personal purchases. That can lead to messy bookkeeping, which is no fun. The other thing to remember here is that regardless of whether you've paid yourself, all income left after business expenses is taxed. If your business is a partnership, you'll refer to your partnership agreement before taking money out of the business. And if your business is an S corporation, there are 2 ways to pay yourself as the owner. One way is to pay yourself through payroll, and the other way is to take a shareholder distribution. Remember that you're required to pay yourself a reasonable salary first, which means setting up payroll with tax withholdings. On top of your salary, you may also compensate yourself with distributions that won't be subject to employment taxes. For more information about what's considered a reasonable salary, make sure to check out the resources in our lesson guide. Now it's checklist time. Use the checklist at the end of the Lesson 4 guide to walk through the process of paying everyone. In our next lesson, we'll dive into the exciting world of small business deductions.